Hello everyone, welcome to Just Invest Today. And today we have a great video for you guys. Today we're talking about Joel Greenblatt. Yes, you're talking about Joel Greenblatt, legendary value investor. And man, I'm gonna make like a little series. I want to talk about the best investors that no one's really getting into, no one's really talking about. And these guys are earning like 50% a year, 35% a year when they first started out. So we have to learn from the best investors and we gotta start cloning and think about these guys more. So in this video, I'm gonna talk about a podcast that Joel Greenblatt did probably like 6, 7 months ago, but I want to get into it, what he said, what makes a great investor, and that's what we're gonna get into in this video. We're gonna talk about it. So I'm gonna go through the amazing points that he made in this video, and we need to do this. We need to go over this video because we need to implement this type of thinking, this type of thought process. If we want to make 50% a year, 40% a year, if we want to make those monster gains, so we got to follow people like Warren Buffett, Charlie Munger, Joel Greenblatt, just amazing investors like that. And so that's what we're doing in this video. Joel Greenblatt started Gotham Asset Management with $7 million at 1985. And from 1985 until 1994, he averaged 50% a year doing capital restructure deals, doing spin-offs, and actually bankruptcies and investing in those type of opportunities that he was finding in the market. Following under Joel Greenblatt's ideas and actually his investment process is key to getting these returns. So in this video, we're gonna talk about it, man. So we're gonna start by talking about the first question this interviewer asked Joel Greenblatt. So the first question was, what have you learned from evaluating other investors? How to distinguish between luck and skill? Basically, what Joel Greenblatt said regarding this question was that you want to be able to keep it very simple. And we've heard so many investors say this. Number one, Warren Buffett says they want to get cinches. They just basically want to get these companies that you don't really have to think about. You just know it's a great investment at a great time at a great price. You just know it. You don't have to do all this crazy investigation. You just make it very simple. So that's one of Greenblatt's main concept, is just making it simple. And that's just valuing the business and buying it at a cheaper price than what the value is, as you do a discounted cash flow analysis on the company. And over time, just over time, the company is gonna follow its value. It might not happen in a month, 2 months, a year, but over time, the market will reevaluate that company to its fair value. Because if it didn't, then the market is just random. It's not accurate. So over time, we already know the market is accurate over a period of 5, 10 years. We know the market is accurate. So that's how we're gonna just make investing super simple for us. It's just making sure we understand the company, we can see the future of this company and its projections, and we just put a value on it and buy it at a cheaper price. So that's number one. That's what Joel Greenblatt is all about. It's just keeping it very, very simple. Number two, you need to have a passion for basically value investing, because as he said, is that you're gonna honestly just go deeper into these companies, trying to figure out what's going on, what is this company doing, and it's just gonna help the research process. Because if you don't have a passion for investing, you're just gonna poo-poo it, you're just gonna put it on the side, you're not really gonna investigate, you're not gonna really do your due diligence and finding value in these companies. So it's important to have some kind of passion for investing. You do a lot of reading, you read a lot of 10Ks. All of that good stuff is super important in this value investing journey. What did Lee Lu said about value investing and having a passion for investing? You have to be like a private investigator. And that's what Lee Lu talks about. A private investigator, finding the ins and outs of the company, what's making this company tick. So that's how you're gonna be when you're getting into this basically this investing space. You've got to be like a private investigator, figuring out if this company is worth it, if it's going to go broke, if it's doing bad things with the company and it's not going to go far, etc. Right? So number one, we got to keep it super, super simple. And just that's just basically valuing the business and buying it at a cheaper price. And we can wait for that value to reach that price. We're gonna wait basically. That value is gonna reach that price eventually. We don't know when, but it eventually will. So the second question that I liked and how Joel Greenblatt answered was, what do great investors have in common? And this was a great question because this gets down to the crux of things. And the first thing he said was patience. So he goes into an example of basically what Warren Buffett always says about 10 Williams, the science of hitting, is that you can wait for as many pitches as you want. In investing, it doesn't matter how many pitches go by you, how many companies go by you. You can wait for the one simple pitch that you understand and you know how it works and you know the value of it. And that's all you need to hit that one out of the park. It doesn't matter if the other 30 succeed. All you need is a couple of these pitches to hit out of the park. So you can be as patient as you want as you watch those pitches go by until the one that you understand, the one that you know, you can hit that out of the park. And that's what the number one thing these investors have in common. So in that journey, you can't get frustrated. And that's the thing, you can't get frustrated waiting for that pitch because sometimes, like in Warren Buffett's annual letters, he'll go by and say that he never made an investment for that year, or another year go by and he doesn't make an investment again. So if you just get frustrated, you're gonna do bad things. You're gonna buy companies that are overvalued, like the price is not there, and you're just gonna do bad things because you have money on the side and you cannot patiently wait. So that's one thing. The second thing is super key, and this is for Joel Greenblatt. He said that it's super important to look at stuff in like different angles and different views. And this is gonna really help me because when you listen to too much Warren Buffett or Charlie Munger, I feel like you're very singular focused, you're really old school minded. But Joel Greenblatt puts it in perspective. You gotta find opportunities in different ways, in different situations that someone else might not see it or might not understand it. And you gotta have to be able to take that contrarian view if you understand that company in a different way. So my example would be something like Tesla, in my opinion. I'm not saying it was the right investment, but I feel like, in my opinion, if I looked at Tesla in a different way, I might have understand Tesla better. So in my view, I'm just thinking about, oh, this company is overvalued. It's a car company, low margin this, low margin that. It has going to be so much issues, blah, blah, blah. If I looked at it at a 40,000 feet view, just overhead, and how I think of something differently, maybe I would have said like, oh, I'm noticing a lot more Teslas are being driven. The brand is super strong. They don't even have to advertise. Like Elon Musk is a visionary. I would have looked at it differently instead of just the old school minded value way of the, oh, this company is not this, it doesn't, like the metrics don't matter. But we understand that Tesla is going to take over a larger market share, and it's like the electric vehicle market is just booming and people are just head over heels for Teslas. It's almost like an Apple cult. So maybe if I looked at it in like a different view, I might have understood Tesla better. Not saying I would have invested in it, but I would have just understood the company in a different angle. And that's what you need as an investor. It's just looking at opportunities that someone doesn't see and you see it in a different light, in a different view. So that's key, and that's what these investors have in common, that they do something different. The second last question that I really liked in this interview, the question was asked about, how do you think about position weighting? And this was an amazing question. He answered this really good, kind of, again, putting my perspective in a different light. He said that sometimes people make a mistake of not putting enough in their best ideas, and that's a huge mistake. Imagine you knew about Google and you only put 2% of your portfolio, even though you knew you had a huge edge in Google. That's a mistake because you're not gonna make a lot of money. You're not gonna have a good sized position in that company. He said that if you have a good understanding of a business and it's simple, it's in your circle of competence, put a nice size like 10%, 15%, whatever it is. But it's a mistake to not put money in a good investment. You have to be okay with taking a big loss in some of these companies because they're not all going to work out. But if you put 1%, that's not going to make a dent in your portfolio. It's not going to move the needle. So that's a huge mistake. When you understand a company, it's simple and you know the value is there and you just only put 2%. That's a huge mistake. What he also said too is that his best companies, the companies that he had the most weight in, he looks at from a top down perspective. So the companies that he has the most weighting in is not the companies that are going to go 5 to 10x. It's the companies that he knows are not going to lose that much. It's not a big risk. So that's how he thinks about it. And that's a good way to think about it because most people think about it, oh, if this company can make 5, 10x my money, that's when I'm going to put my huge position in it. But the way Joel thinks about it is, if this company, I know for a fact, this company, I won't lose that much money on it. And that's how he gets his weighting, his conviction in these companies. So that's a different way to look at weighting in your portfolio, how to look at it, how to weight it properly. So that's a good idea to have in your mind. And then the last question that I really enjoyed was about management. And basically the question is about how can we trust management? How is it reliable? How do we know about good management? And just quick and easy, Joel Greenblatt said that you just have to understand, you have to look at the history because all these CEOs got to their place for a reason. They're all like good salespeople. They're all talented, all have good educations. So what's gonna like differentiate themselves like as a capital allocators? Like what's gonna do that? And the thing is that you have to have a history. What has a CEO done? Like in the past, has he been a good capital allocator? Is the return on equity good? Is he making good investments? Is the company growing? Like look at what the company has done in the past, and that's when you gotta read the 10Ks. Look what the management says. Has the management been truthful about what it's saying and what it's doing? Like, are those in line? And that's how we find out if the management's good. So if the management hasn't been in line with what he's saying, if all the capital allocation decisions were bad, you don't expect that to just be good going into the future. We can't trust that. So it's good to have a history of that CEO and what he's done in the past so we can know if he's a good capital allocator and if our capital is secure in good hands. So that's how he finds out what good management is. So guys, that is it for this video. Joel Greenblatt is an amazing investor. There's so much to learn from him. I'm going to probably do another video on him, but that's it. Like this video, subscribe to my channel, and I'll get back to you in the next video.